Welcome to this explainer. Today, we are tearing down pretty much everything you thought you knew about building wealth. There's this massive, persistent misconception out there that getting rich is just about landing a high-paying job and keeping that hefty salary safely tucked away in a traditional bank account. But here's the reality check. True wealth literally isn't built that way. In fact, if you're just hoarding cash, you're actually losing ground. So today, we're going to look at the exact blueprint of how millionaires actually invest their money, straight from our source material, and uncover the specific strategies that turn ordinary income into extraordinary, lasting wealth.
What if I told you that most millionaires do not become rich from their salaries? It sounds crazy, right? But it's the absolute truth. The wealthy don't get wealthy just because of the size of their paycheck. They get wealthy because of where they direct that paycheck. While a lot of people spend every single dime they earn on flashy sports cars, luxury watches, or, expensive vacations just to look rich, things that famously drop in value the second you buy them, actual millionaires are doing the exact opposite. They aren't just saving, they're actively making their money work for them. They're deploying their capital into assets that quietly generate wealth year after year, entirely behind the scenes.
Okay, let's dive into this blueprint. We're going to unpack this in 4 stages. 1. The mindset shift. 2. Core wealth-building assets. 3. Offense and defense. And finally, 4. The power of time.
Part 1. The mindset shift.
A lot of people just assume that millionaires possess some kind of secret access to hidden investment opportunities that are completely locked away from ordinary investors. But the source material makes it totally clear that this simply isn't true. The biggest difference between the wealthy and everyone else isn't VIP access or some magic formula. It's their psychological approach to money. The average person looks at a paycheck and asks, what can I buy with this? They see money as a tool for immediate consumption. But millionaires, they treat every single dollar like an employee. And that employee's only job is to go out into the world and recruit more dollars. They give every dollar a job. That simple but profound shift in perspective changes absolutely everything about how you handle your finances.
Part 2. Core wealth-building assets.
And this brilliantly illustrates where those dollar employees actually go to work. They're spread across 4 main asset classes: stocks, businesses, real estate, and index funds. This is exactly where millionaires park their capital to generate continuous growth. They never rely on just one vehicle. They use this broad diversification to build a solid foundation that can weather economic storms and consistently grow over time. Let's break these down one by one.
First up, stocks and businesses. Owning pieces of growth and generating cash flow beyond the hourly paycheck. You see, one of the biggest myths is that the wealthy keep all their cash stuffed in the bank. In reality, they buy stocks because it allows them to own small pieces of incredibly successful growing companies. When those companies grow, the millionaire's wealth grows right alongside them. But they don't stop there. They also buy or build businesses. Why? Because a business generates real cash flow. In fact, a massive percentage of self-made millionaires cite business ownership as their primary wealth generator. Unlike a typical hourly paycheck, a well-run business just keeps earning money even when the owner is sleeping, on vacation, or just not actively working.
Then there's real estate. Buying properties that pay your bills, not the other way around. This has always been a favorite among wealthy individuals, but maybe not in the way you might think. Millionaires don't necessarily prioritize buying the biggest, most expensive mega mansion to live in. Instead, they buy properties that generate regular rental income. They're laser-focused on income-producing assets that actually pay their bills rather than becoming a massive liability that drains their bank account. Plus, real estate often appreciates in value over time and offers some huge tax advantages that the wealthy know exactly how to leverage.
The final slice of our asset pie is index funds. Because simple often beats complicated by diversifying risk. This one actually surprises a lot of people. You might picture millionaires sitting in front of a dozen monitors all day, aggressively day trading and picking individual stocks. Well, scratch that. Many of them don't do that at all. Instead, they invest heavily in low-cost index funds. By doing this, they aren't betting their entire fortune on one single company. They're owning hundreds of companies all at once. This broad diversification drastically reduces their risk while allowing them to participate in the long-term overall growth of the market. There's actually a famous story where Warren Buffett bet $1 million that a simple S&P 500 index fund would beat a group of elite hedge funds over a decade. And guess what? He won. It just goes to show that in investing, simple very often beats complicated.
Part 3. Offense and defense.
So building wealth isn't just about picking the right assets. It's a strategic game of 2 halves. Let's talk offense first. Millionaires rarely depend on just one paycheck. They build multiple income streams: rental income, dividends from stocks,
business profits, royalties, digital products, online businesses, consulting, the list goes on. By creating this web of income, they build incredible financial resilience. If one of these streams slows down or dries up entirely because of a market shift, it's not a crisis. The other streams simply continue generating cash. Diversification isn't just for their investment portfolio, right? It applies directly to their income as well. But perhaps the most important offensive strategy is this. The ultimate investment is you. Books, courses, coaches, seminars, and new skills. Millionaires are absolutely obsessed with self-education. Why? Because increasing your knowledge creates opportunities that money alone simply cannot buy. The formula is actually pretty straightforward. The more valuable your skills become, the more valuable you become to the marketplace.
Now, what's really interesting about this is how they play defense, deeply understanding the stark difference between good debt and bad debt. Good debt is a tool. It's used strategically to acquire income-producing assets, like taking out a mortgage on a rental property that literally pays for itself. Bad debt, on the other hand, is a complete wealth destroyer. It's used for financing luxury consumption, expensive gadgets, lavish vacations, designer clothes, all sitting there on high-interest credit cards. While ordinary earners drain their wealth paying high interest on things that lose value, the wealthy aggressively avoid bad debt to protect their net worth.
Part 4. The Secret Ingredients.
We've covered the mindset, the assets, and the strategy, but there is one final, climactic element required to make all of this actually work, and that secret ingredient is absolute patience. Ordinary investors often get caught up in the days column. They want quick profits, they panic over short-term market noise, and they make emotional decisions. Millionaires operate on an entirely different timeline. They focus on months to ensure they're investing consistently, but their true vision is set on decades. They understand that wealth grows slowly. By ignoring the daily noise and staying focused during economic downturns, they allow the mathematical magic of compound growth to do the heavy lifting over many years. Honestly, patience is arguably their greatest financial advantage.
Let's see how this builds into actionable steps. What does this all boil down to? It translates into 5 repeatable daily habits. 1. Spend less than you earn. 2. Invest consistently regardless of what the market is doing today. 3. Own assets instead of liabilities. 4. Keep learning and investing in your own skills. And 5. Think in decades, not days. Building true wealth isn't about getting lucky or hitting the jackpot. It's simply about executing these smart financial decisions repeatedly over a long period of time.
We've laid out the entire blueprint, and now I want to leave you with a provocative question to really think about. If you had $10,000 to invest today, right this second, where would you invest it? Would it go toward a liability, or would it go toward an income-producing asset? Remember, the journey to $1 million doesn't start with $1 million. It begins with one smart financial decision made today. The absolute best investment is the one you make with discipline and the one you consistently stick with. Keep that in mind as you map out your own financial future.